Apple misses earning estimates for the first time since 2004, dragging the tech sector lower. While Morgan Stanley beats the street, earning $1.14 a share on revenue of $9.9 billion, and rumors swirl that the European bailout fund could be leveraged to as much as €2 trillion, infusing hope into the markets. I'm Alex Steele, and the Morning Call starts right now.
Good morning,
He's Scott Redler, Chief Strategic Officer at T3Live.com, and I'm Alex Steele with The Street, and together we bring you the Morning Call. All right, so here we have it. Stocks, reversing directions on Tuesday, ending in the green, kind of clawing their way into another rally today. Of course, the Nasdaq is a different story, with Apple weighing on the indices. So have we seen enough of consolidation, and we're going to head higher going from here? Do you have conviction in the rally?
Well, at this point, if I would stop laughing, I'll try and tell everyone what I've been seeing on the charts. Sorry, I'll let you know the joke if you listen to my radio later. Anyway, which I won't. The rules that the market have been following for a while have been a strict set that we follow here as technicians. We like to see commitment to a rally. And since we reversed over 2 weeks ago, we've seen that commitment. We've seen shallow retracements. We've seen dip buyers come in. We've seen leaders break out. We've seen laggard groups join the party and the whole market broaden out. So at this point, you have to somewhat trust it. And I know everyone doesn't want to trust the market because of the headlines, because of Europe. You know, that news out of The Guardian, they think that was the catalyst to yesterday's move. It might have been a little bit of fuel for the fire, but that fire was burning once the banks turned after the first 60 minutes of the day, and once we held 1190, which was a shallow retracement. So let's take a look at that right now on the chart.
Do you think that, as we go to the chart, do you also think that perhaps the Nasdaq's going to hurt this, or this is a rally on its own?
Well, we'll see if they dampen the parade a little bit later, but as of right now, this was the rally that started on October 4th, the day to take notice, the day that we like to get excitement. Here was that minor little pause, not a big pullback. We didn't fail and go back down to the lows, and then this was another entry as we broke the small downtrend. Then last Thursday we paused, and then yesterday everyone said the rally is off, and we tried to say just watch your retracement levels. See if you could buy this 1188 or perhaps the line in the sand at the 50-day around 1175. Yesterday, big support held or higher support held, which was a very aggressive move for the bulls, closed really strong with some decent volume. So now I think we should see some continuation up to the 1245 to 1255 area.
Do you think that there's some more short covering juice left? And then should you maybe be taking profits into that if we do see some kind of rally?
I think a lot of people got squeezed, and some people that actually covered started to re-short again once we, took a pause on Monday, and now they're in trouble because they didn't cover yesterday. So try not to fight this rally. Try to make money with it. Try and rotate through the best stocks. And I know, Apple is going to be a concern today. Right. It's a concern of mine. It's one of my favorite stocks to play. I did take options, and I lost money. That's premium paid. But there could be some good opportunity buying the dip in Apple and seeing how it handles the gap as we move forward and see what kind of impact it has on the Qs in tech.
All right, well, so let's go to earnings, so then we can start with Apple missing estimates for the first time since 2004. So in some respects, we're in uncharted territory here. We usually see a 2% pop on the day after earnings. We're obviously not going to get that today, at least not when the market opens. What's your strategy now?
My strategy is you have to have two, depending on your time frame. Okay. If you are a long-term investor in Apple, I think you're going to be fine. If you're a short-term guy like me or some other guys out there, you trade it versus a 15 or 30-minute low. If you take a quick look at Apple, you will see that the stock, was near the highs, somewhat priced for perfection. I do see a big support area right around this 400, which is actually through. And then really the 50-day moving average, which it hit last night, is around 388. Right now, it's around 395. So what you want to do is look at that support, trade it versus the first 15 minutes so you have a point of reference. And then I would say over the next week, you need to see how much of this gap gets filled. Right. Does it control this stock and change the direction? Because if a lot of the gap gets filled over the course of the next 5 to 7 sessions, that means the market gave it a pass. It's somewhat a non-event. We'll see what happens in the fourth quarter where they guided it up, okay, and then we go. But if that gap stays big and controls it and we can't get back in the gap, that could cause a new direction, and that would be more of a longer-term concern for the stock. Right now, all it is guys that took fast money trades into earnings like myself are down a bit, but it's okay. We make a lot of money with this stock.
And if you're going to hold Apple for the long term, then perhaps do you want to wait until you see if that gap is filled and how that plays out before adding to your positions?
Yes.
Okay.
Unless you're an aggressive investor and you think that you can handle adding down here, I think you should wait and get more data.
All right, so let's go to Morgan Stanley reporting before the bell today, earning $1.14 a share on revenue of $9.9 billion. Now, there was a revaluation or a widening of the debit-related spread, so basically that means they really earned 2 cents a share, but that's still a beat. That's pretty positive. What's the stock doing pre-market, and how would you be trading?
Stock was up a bit, and it had a big move yesterday with Goldman, with Citigroup, with Bank of America, with those earnings from yesterday. So for today, I think that earnings report will keep it in stride. It might not get it, another 2 to 5% higher or push it higher, but I think, with a little bit more time, these banks have a loaded trade against it. If you look at Morgan Stanley, look at this move it had already. The stock came well off the lows on that Tuesday, held higher than yesterday, ignited through a pretty long-term downtrend. So that showed some power, and there was volume. So I would say as long as it holds above $15.70 or $16, I think the path of least resistance could be to 18 to 19 at some point this year.
And also, it has rallied 33% as we can see in October, which is pretty huge. Let's beat the other banks. Okay, so let's just briefly touch on Goldman and Bank of America a day after they reported earnings and had that big pop. What do you foresee for more juice right now, or you want to be cautious?
Yesterday was a good trade. It was something good to focus on, because yesterday it was all up to the banks. Could they hold up for 60 minutes? Not 15 or 30, but show commitment buying for 60 minutes to squeeze the shorts and get people comfortable. And once I saw it hold up and hold above 98.50 on Goldman, we got involved as traders, and, it paid off some investors. So if you look here, I drew this chart yesterday, and some people say charts don't matter. I say you're wrong. Here's your downtrend, and we broke above that, held in tight. Here's your little wedge. This is why I was talking about 98.50, and if you've traded it, you had a nice move up to about 103. I think this moving average will make it pause for a bit, but I think as long as it holds above this 98.50, you could see 110 to 117 at some point this year in Goldman.
And in Bank of America, same kind of trends?
Same thing. It traded above 630. I wasn't sure if it was going to happen yesterday, but at least we had a plan to watch. And once it traded above 630, held, had volume. Look at the move that Bank of America had yesterday. It doesn't always happen this way, but this was that small little downtrend that I drew. Nice day yesterday. Here's a moving average. Could make it pause, but this stock could see $7.5, $8 also at some point this year. And if we get a little bit more traction from these banks, and obviously you can't get excited and pay up for them, I think overall it's going to help the markets move forward.
2 more stocks I want to hit on really quickly. Want to go to Yahoo. Beat earnings and revenue. Well, revenue is actually in line, but it did beat on earnings. There's still a lot of uncertainty about its future. Will it do a joint partnership? Will it actually be able to sell itself? So what do you make of a good quarter with a murky backdrop?
I think that you have to avoid it.
Even though the stock is up in the pre-market.
If you're long it, if you're long it from 14 or you're long it from lower prices, I think if any company that the only way they could think of having long-term traction is by getting bought. You don't want to pay up for it, but every time it starts to get hit or go lower, that talk will come back out, so you could buy it. So, if you do think it gets taken over, buy a small amount, but never play a stock just for a takeover unless you have a long-term fundamental thesis. I
just want to hit on Intel as well. Had a solid quarter, net income rising 17%, revenue rising 29%, both beating estimates, reporting higher sales for its PC, laptop, and service processors. This was a pretty awesome quarter.
It was, and finally it's getting rewarded. Over the course of the last year, how many quarters Intel had that people just ignored and sold? They were like, best quarter in company history, let's give it no PE and let's not trust it. But finally, it's having some traction. The semis are doing a bit better. Intel just had a big move. So if you look at Intel, it's hard to buy it today. If you look at the macro picture of Intel, you've had a lot of entries, this being one of them, okay, and then the retest of that area, and then this was your momentum add. So holding up here and then opening up on earnings, I would sell some, okay, sell some if you're in tier 2 or tier 3, but hold some because longer term it looks like institutions are starting to love this name again.
And Bespoke said that on average since 2004, Intel stock is actually down almost 0.5% on the day after it reports. Just keep that in mind. All right, we'll be right back with some more trades in the semi sector and also some quick ways to make some cash, so stay with us.
When the closing bell rings, it's not quite time to run off to happy hour.
Good afternoon, Scott Redler, T3 Live. Welcome to today's recap.
Before unwinding, take stock of the trading day. What's the complexion of the market? Which trade from the morning call triggered? What sectors are in play? And where will the opportunities be tomorrow? Scott Redler covers it all in the T3 Live Daily Recap video. The T3 Live Daily Recap airs every day after the close.
As far as these markets are concerned, we got to take off those glasses.
All right, let's get in the trenches here with some more tech stocks. Now, Scott, the semis have been doing really well of late. Are you worried that perhaps Apple's loss will just drag the whole tech sector down today?
Psychologically, it's going to put some water on the fire that's been burning. I think the Qs and the NASDAQ have been the place to be. The semis have been a very strong sector over the course of the past few weeks, and I don't think Apple's earnings, unless Apple really falls apart today, is going to dampen it. It just could pause the move.
Which could provide a buying opportunity, and what level might you be watching for the semis? Whoa, can't get it out.
Wednesday,
SMH.
hump day. Okay, there you go.
I got it.
Your turn to have the laughies. All right, here we go. SMH, if you look at the chart here, nice move off the lows. It's surprising. I didn't know that it actually made new lows below the Q, so this actually showed some relative weakness to the Qs, but it played catch up pretty fast. It's now in front of some resistance here. It's probably going to push through it on Intel. But this level of 31 is going to be a little bit of a challenge. But I do think that you could stay with this group as long as it holds above 29.50 for extreme momentum. This could, by a year end, actually, as I look at it, could see about 33. If you look real quickly at the Qs, the reason why there's been so much strength is that this group did not make new lows as every other group did on that Tuesday, showed you relative strength, and it actually pushed through this minor resistance. So the Qs are holding higher. The Qs have been a place to be for tech. Next resistance is these highs around $60.
And so let's go to some individual names. Want to hit on Broadcom first, which incidentally has exposure to Apple's iPhones and also Amazon's tablet. And I read today, Scott, the DigiTimes reported that total shipments of the tablets from Amazon should be between 4.5 million and 5 million versus expectations of 4 million. So this could be a little catalyst for Broadcom, but then maybe tempered by Apple's quarter. Is there a good trade here?
I think Broadcom is one of the chosen ones for institutions. It's been acting better. It's in the right group. It's down a bit with Apple today. I think you don't have to rush to buy it on this down move, but I think that it's buyable. Okay, so I think at this particular point, you could perhaps nibble a little bit, but look at the size of this move that it just had. So don't get aggressive. I think that closer to this 36 area would be a better buy, but I do think this is not the high of the year.
And what about ARM Holdings? The company licenses its designs, so its margins are really awesome, but also its designs are in 95% of mobile processors around the world. It's pretty awesome. It's almost near the 52-week highs. How would you be playing this name?
I think this stock is also a chosen one. It's in the mobile field. So a lot of people said that Intel didn't have a great plan on mobile or on the tablets, and ARM Holding is the one for it, that Intel could take them out. And so it could be a takeover target, and it has fundamental growth. It's something that could be in your portfolio if you're looking for a high beta performance.
And how about SanDisk? Reporting Thursday after the closing bell, expectations are that it'll report revenue of $1.42 billion on earnings of $1.07 a share, but running into earnings. So how do you deal with that?
It's hard. When you come into earnings, even like something you saw with Apple, it could be tricky. And SanDisk has acted better. I've been trading it for the past 2 weeks also. We had a few buy strategies. If you look right now at SanDisk, you will see that it did break this downtrend that I was talking about. Look how the low here, the Tuesday low of the market, everything was down here. Look at the relative strength, how it held higher. That gave us some clues it was going to break this. And now, it's holding up. It's probably off a little bit with Apple. I think if you're long it, stay long it. And if we do see a retest of 42, I think it'll be buyable. And if you're not long it and you don't have a thesis or the risk tolerance to buy it or hold it through earnings, take in the money calls so you know what premium or you know what your risk is.
Just so you know, though, the company has reported a jump in revenue for 4 straight quarters. Something to know. Something to know. Okay. Let's go to some quick ways to make some cash today. We're going to start real quick with eBay. Can we do this? Reporting after the closing bell, has beat earnings about 85% of the time since 2000 before, again, according to Bespoke, and rally fractionally on the day. I know we didn't talk about this before, but can we just look at the chart
to see
if there's
a quick look?
setup?
eBay, I've heard a lot of people talking positive about eBay. It must be acting better, and look, rightly so. Look at this move. This stock is now at big time resistance, and it's up here. And this, I'd love to see this. Oh, it's after the close.
Yeah.
It's going to have to be good in order to clear it and really break out and sustain it. So just be a bit careful, because this stock right here is definitely priced for perfection. It's not like at the low end of the range where it's not going to have to do much. It's going to have to be really good in order to go. If you're an investor in eBay, you've been rewarded. If you're looking to trade it, I would not enter right here ahead of earnings.
All right, fair enough. Let's go to Starbucks at a new 52-week high. Time to sell?
This has been real strong. Yesterday, traders on my floor were chirping. Starbucks is going. It was a great momentum trade, a great add-on, a great investment for those that have been involved. See, you can make money if you hold things long-term also, besides just trading Starbucks right now. This chart looks really good. It's just starting to break out above this recent area. When did you say the earnings are on this?
I didn't.
Okay, so just we got to look out to see where earnings are. I think you could stay with this trade higher. I would have liked to have seen you get involved here when it showed relative strength or cleared yesterday. I think there's more room, but just know your risk that you're paying up for something in a market
Right.
that it's hard to pay up for.
But I can tell you the Verizon reports on Friday after AT&T, and it's an Apple's play as well. How would you be playing this off of all those different variables?
Well, I think Jim talks about Verizon a lot. A lot of people love Verizon because
Juicy yield.
Juicy yield, and price appreciation. So that's bang for the buck, and we love bang for the buck on this show because it gives you out of performance. So if you look here, the chart looks actually pretty good also. Looks like there is a trade setting up. You know, you have a big resistance. We're coming into it. It's been, you know, making, I keep saying, sorry about that. Low, higher low, higher low. Through 37.50 could be a decent momentum trade. I think if you're an investor, stay with Verizon. And as a trader, you could get a nice little trade above 37.50. All
right, let's go to the OIHs here. Oil prices rallied on Tuesday, but still can't break that $90 level. So what does that mean for the OIH? Because it seems like whenever oil sells off, so does OIH and tenfold.
Yeah, they've been pretty correlated lately. And they're always, at extreme times, they get very correlated. Right now, they've been just moving in tangent. It's more been like, oil goes up, the economy is getting better. OIH has had a big move off the lows. They held higher. If you look here on them, it's not a leading group, but there's still some juice here. I put these retracement rules in for here. This didn't hold the 25%, but held the 0.38, so it's not as strong as the market or as strong as tech or retail, but I do think that there's a move here up to 130-ish if this market stays intact, which it looks like it should be.
And then what about Google finally getting a nice rally yesterday?
Google came into the earnings gap and then rallied above 578. That was the pivot from the price point sheet. I think this stock is acting better as an investment. You could stick with it. As a trade, I would add to it if it could trade above this gap. I drew this yesterday. This is where it held. I think above this, what was that, 599.60, which was the high from earnings. Above that, you're going to see a squeeze back to these highs.
All right, fair enough. I want to wrap it up here with the GLD. Got to talk about gold. So hitting a low yesterday of 1628, kind of getting a little bit of a bounce up like $4 today. What's the deal here? It seems like we are range bound, and I'm having a really hard time nailing down a direction from experts. Sometimes
gold just is out of play. And people have been loving gold this entire year. It's been where the action is. It went as high as 1900. It became the obsession of everyone. And then it's corrected. And now it's just in a holding pattern.
And now it's moving with stocks. Go figure.
Right, exactly. So that's why you have to have sector rotation. You have to go where the action is. So if you look here at the chart of the GLD, you'll see it's still in this lower range. Okay, and it held this minor uptrend. Okay, and I just think that if for an investor being tier 1, as a trader, just avoid it until we see a new direction.
All right, that's it for us for today. So it's Wednesday, it's hump day. Happy trading, everybody. I'm Alex Steele from The Street.
And I'm Scott Redler from T3. Make sure, I knew who I was this time.
You did. You got there.
Follow us on the virtual trade floor in the chat, and I'll see you at the recap. Have a great day.